All right, everyone. Welcome. Welcome. It's Ben Leto again. I am really thrilled to have you. Thanks for joining me here. We are looking at the BOSA spread trading system. Have you ever traded a spread before? All right, actually, that's a trick question because everyone trades spreads. You don't realize this, but a spread is really just buying one instrument and selling another instrument. So, technically speaking, whenever you buy something, you're trading out dollars. You're buying an asset and you're getting rid of dollars, right? So you're actually spreading the asset against dollars. And the BOSA system is the only spread trading system for the NinjaTrader platform that I know of where you can buy one instrument and sell another instrument and get a nice looking plot of those two and have some tools to evaluate them and some tools to trade them effectively and quickly. So BOSA is a buy one, sell another indicator, really. And what we're looking at here is a spread, a difference between the 6E and the 6S. Now that's the euro currency against the Swiss franc futures. These are all futures. And we're looking at a chart here. Now this blue bar chart shows the difference between those two instruments. If you were to buy the 6E and if you were to sell the 6S, this is your chart right here. So it would have been really great to have bought it here at, what is that, about 4:45 in the morning Eastern time, and you would have had a great rally up because the 6E went up in comparison to the 6S. So if the 6E goes up or if the 6S goes down in its price, then the asset, the spread, will appreciate and become worth more in value. So this is what we're trading today. I have got a tool here that prints this information, but what I'm also adding is these green lines are equity distance lines. And I've got them set to 100, 200, 300, 400, 500. So the distance between this gray center line and this one is 100, this one is another 100, this one's another 100. So we have these kind of grid system. Very easy to evaluate the value of this spread. Now I actually went short 2 times in this spread. I went short here right when we hit the $100 level. I think it was a little bit after, so maybe right in this area. Let me draw that. Do an ellipse. I think I went short right about here, and I also went short right here. You can see that line. Now that was a little early. Honestly, a smarter play would have been going short once we hit this moving average. But we're in. My average price here is showing as 10,903. You can see the short description here. And I'm just waiting for it to break down. My target is down here at this moving average line. Now this moving average line I think is a 300 period. Let's just do a quick check on that. It's a 400 period. The channel line is 400. So it's a 400 period of the spread. And we're looking to see this spread come back down. My target will get me out at a $510 profit, roughly. Actually, about a $500 profit once we get down to that level. Now, I'm going to hold on for this. Spreads, as you know, if you compare two instruments together, they operate, if they're correlated instruments like the 6E and the 6S, they kind of oscillate around one another. They're similar in um, uh, purpose. These are two currencies futures. You can spread anything against anything. Okay, that's not a question. But we're gonna trade correlated spreads. We don't want to trade uncorrelated. You want to trade correlated things. And what that means is that when one instrument goes up, the other instrument goes up. One instrument goes down, it correlates to the other instrument going down as well. And what we do is we look for times when it doesn't correlate much because those are times when you can hop on the bandwagon and get value when they become, again, when they oscillate back the other direction and bring you back into profit. So for example, right here at the bottom of this move over in the European session, we were quite a distance from this 400 period moving average. So this is a great time. The spread is oversold, and buying here would have seen a spectacular gain. I was sleeping at the time, but this line here, this value from here to here, is a $594 move per spread. So $594 difference uh, in that move. Now it's not a lot, so you're not really going to be risking a lot. But the advantage here is you can trade, more than one contract, obviously. So I'm trading two spreads. Right now I'm short two. That means I'm short two in the ES and I'm long two in the 6S. Did I say ES? I meant the 6E. I'm short 2 in the 6E, and I'm long 2 in the 6S. So let's see how this continues to mature. If you have any questions, guys, I would love to chat with you. So feel free to um, post a question. We're not going to be on here too long today. I've got a busy schedule. But this trade was starting to move my way, so I wanted to jump on and share it with you. I've got about another half hour before we wrap it up. Let's see if we can hit our target. Now, the nice thing about this too is that it's very little drawdown. Very little drawdown. If you're trading a prop firm evaluation and you can't risk more than $1,000, let's say, before you fail your evaluation, well, you don't want to you don't want to have a drawdown. You don't want to have that. That is definitely not going to help your situation. And spreads limit the drawdown. My drawdown on this trade here has only been at most $181 floating P&L. You can see up here that I am short the 6E and it's done a strong move against my position. I'm down $787. But on the other hand, I'm up in the 6S because I went long the 6S, $781. So my spread has kept me from getting a big hit, a big loss. Here's that 6E chart, 825 right now. I'm down, but I'm up 768 in the 6S. Now, the minute that the ES starts dropping, and I expect it to be in an oversold condition here, we're going to come into profit. So right now I'm down only $93, the difference between the two. So again, I'm short the 6E, I'm long the 6S, and we're going to get that spread to come together. All right, let's take a look here. We're back at the spread chart. You can see on the right there's a blue dot and a kind of a pink dot. These let me see if I can just do an arrow line. So you see that blue dot and that pink dot right here. This is the bid and ask for the spread position. So if I were to buy the spread, I would be paying the blue dot price roughly. If I was to sell the spread, I'd be paying the pink dot price roughly. So that tells us where we're at in the current value of the spread. Once those pink and blue dots come down here, I'm in profit. Once I get below this short label and this line right here, that is where our position is holding right now. I'm only down $68. Very, very low risk move. Very low risk. Um, let's take a look at another spread while we're waiting for this one to mature. This is the 6A, 6J. So this is the Australian dollar against the uh, Japanese yen. I'm going to turn off some channels. Let's hide reversal, spread dots. There we go. And this is our little interface, so it's very handy for cleaning up the chart and taking a look at the image. And this certainly would have been a good trade. I'm looking for it to go over into these lower green lines and buy when we break above the moving average. The idea is this spread should return back up to a median price, and that would have been a good move right there. Come right here, we have a good oversold area, again below the first green level. We buy that trade, we're maybe up $100 or so on that position. Let's look historically here. Right here was a pretty good setup. We just went above the upper green. I would have sold when we hit that moving average, and we would have gotten out in about the middle area, which is that yellow line. Here's a number of good trades. We went above the green here, sell it when we hit the moving average. We get out right about here when it starts to go. We want to target the gray line at that point. Another good trade. We short here, we target that gray line. Here we're going long once we hit the moving average. Took a little bit of time, but we did hit target. Here you wait until we're above the green line, come back when it hits the moving average, you go short, real nice sell-off. So that's the kind of oscillations we're looking for to make this a profitable a spread trade. Now the other thing too is since I'm long 2.6S and I'm short 2.6E, we can exit out, we could leg out of this position. Like right now, I'm up pretty well profitable in the 6S. If I think that this is going to go short, which is, tends to be running out of gas right here, we could liquidate one or two of these contracts and lock in profit, while the other one, the 6E, is coming into a more profitable position as it drops down. So we would be holding on to that as it sells off. So you're guaranteed a profit on the 6S. Let me bring that up again. This is 6S. Getting out here means we've locked in about $600 in profit. And we're then still short two 6E contracts. I'm going to hold on to it though. I'm going to wait for the spread theory to work out. So let's stay the course. How have you guys been? I haven't talked to you for a while, so I'm really interested in hearing how your summer has been. Right here, we're coming at the end of September. I've been doing really well. My wife and I are in Florida, loving it. God has blessed us here. Now, if we had a really strong sell-off in the 6E, that would do well because we are short the 6E. If we had a really strong buying rally on the 6S, that would also help us. But since they're correlated, we're not taking a lot of heat, and that is super important. Spread trading is not new. This is a ancient technique of mitigating your risk, reducing your risk. I mean, first of all, it's diversification, right? So you're actually diversifying your holdings. Um, and if we had a big news spike in Europe, let's say, a war or economic crisis, you would expect the 6E and the 6S to move in similar fashion. So you're actually reducing your risk. If I was just holding, a contract of the 6E, spikes could definitely move against you in that kind of black swan event and cause a huge drawdown. So this is how people would trade before we had stop losses in electronic markets. You have basically a built-in stop loss. You're protecting your position by covering it with a hedge. Now, there's other types of spreads. Um, you have probably heard of some famous ones like the crack spread. Now, the crack spread is oil, heating oil, and gasoline. So, crude oil is cracked. It's broken apart. and it results in the production of heating oil and gasoline. And there's a certain ratio where that all works out. I think it's like, three for every five crudes you trade, I think it's like three gasoline contracts and two heating oils or something like that. So you're actually tracking the cost of the crude against the value of its elements and its products. There's other spreads that are a little more aggressive. You can have spreads in the equities, not a problem with that. Spread the YM against the R2Y. So you're looking at the difference between the Dow and the small caps. A good way to mitigate risk. Another one is some good correlations come out of the metals. So who wants to trade huge position in the silver? What you do is you look for times of correlation between silver and gold, or silver and copper. And these industrial metals have impact when you get industrial news events or trends or technology comes out, technology news. So you're able to mitigate your risks. Now, most spread traders, they trade much longer time frames. You'll be trading time frames of months instead of just hours. So we're looking at kind of shortening that time horizon. So we're only going to be trading them intraday. I'm not going to be holding these positions very long. But with spreads, you can take advantage of seasonal cycles. There is a time when soybean values have typically risen and wheat futures have fallen, or corn. Soybean and corn are used as feedstock, feed for livestock. So uh, you'll see a lot of hog farmers who, based on the value of uh, hog, will either buy or sell corn or soybeans as a feeder. So those are correlated, and you see a good correlation come out of that seasonally. When farmers are selling off their pork bellies, they're also not buying a lot of feed for those that are going to market. So there's a lot of reasons that spreads work. It has been around much longer than electronic markets and stop losses, and it's a great way to detrend a trade. All right. Well, we're hoping for that 6E to come dropping down. It looks severely overbought. And I'm not going to be greedy. I will move my stop up. So I'm going to trail my stop. My goal is to keep it right on this gray line. I'm going to be keeping it right on the gray line. You can see I'm short two spreads right here. Short two profit and loss right now is I'm just down $131. Very low, uh, low risk. Not a lot of heat here. So each one of these bands is $100 um, in points, 100 points. But since I'm short two, this is a $200 distance. So if I got down to here, I'd be up about 200 and roughly, $50 or so on the position. About 200. So I'm targeting 522 down to the midline. But that's also from the current price. So just waiting for this spread to break down. Other spreads you can consider are taking a look at live cattle versus feeder cattle. So the decision that ranchers make is, do they want to take their cattle to market today? Those are the feeder cattle, or do they want to hold them? And that's live cattle. So feeder cattle are those they're kind of feeding and bulking up to get to market, and live cattle are the ones that they're going to hold for a little bit longer time. You spread those two against one another. Again, soybean and corn. And long-term seasonals are great. There's a whole series of analysis techniques for that. Spreadcharts.com is one very popular site that lets you do these kind of seasonal analyses. Um, take advantage of tools like that. But we live in a crazy era of trading where people aren't interested in those long-term moves. I don't blame you. It gets a little boring waiting for a long term, but this is how the big players do it. Uh, Larger holders, in traders and futures are not looking for day trader action. They are looking for an industrial and a methodological approach to trading, and they're going to be on these spreads, happily sitting them on them for a long time, playing seasonals. Get every edge you can in your trading. All right, while we're waiting for this, I want to take a look at heating oil. One of my favorite markets to watch is heating oil. Had a good trade on Friday. Got in, got out pretty quick. Now here is the Leto channels, overbought, oversold. Wow, great trade right there. That was the one that I missed right there. Beautiful trade. Crude oil as well had a good trade right here. Another good trade right here at about 8:20 in the morning. Leto channels is a long-term overbought, oversold indicator. Basically, these channel areas down here, these kind of pinstriped areas, below the yellow line, these are oversold levels. Above the yellow line, these are overbought levels. Um, so the green background stripes show where you're looking at buying. And yeah, that would have been some great trades there. Here is that same indicator on the MYM, I should say. And here we are on the MNQ. Yeah, there's another good trade right here. So, all right. So the spread is holding out against me, and that's fine. This is the 6E. Again, we're short. Coming up in your area. Prior support now has become resistance, so this would be a good uh, short possibility here. The 6S, it's slumping off a little bit more than the 6E, which isn't what we want since we're long the 6S. And we had a U.S. News event at 8:30. I think we had a woman speaking from the Fed. All right, 6AJ. Now you can also spread the 6A against the 6N, and that's the Australian dollar versus the New Zealand dollar. That one doesn't move much at all, though. Oh, one other spread type I didn't mention is the intercalendar spread. So you can spread the front month against the back month. Great idea. Let's say crude oil, right? You don't want to take that much risk. So if news that affects crude oil today will affect the front month a little bit more drastically, typically, volatility wise, compared to the back month. So if you're trading December, what are we on nowadays? We're on November crude. For trading November crude against December crude, that's a great way to do it as well. And we can trade that. We can chart that with BOSA. That is not a problem. All right, we want the 6S to get up there or the 6E to come down. 6E is still kind of holding up here. Let's add, I'm going to add the ATR forecaster. And we're going to add the ATR forecaster here. Yeah, so there we go. So the ATR forecaster is showing us the daily ATR. That's this green line to the, no, I'm sorry, this green line up here to the dotted line to the red dotted line down here. And the average range of the day is between the green and the red. And we can see right here, we were near the oversold part of the day. Uh, and it would have been a great time to consider going long. And that's what we did. The 6S, we did buy at the low, near the low of the day. Great trade on its own. And the 6E was more above. It was in the middle of the range. So this gray area is the no man's land, I like to think of it as, where you don't want to be trading any direction. So it was smart for us to go long on the oversold and short on a kind of one that can go either direction, right? So the bias is to go and have bought the 6S. And that's what we did. We shorted the 6E. Now, unfortunately, the 6E did a really strong pop northward, and that has kind of put us a little bit behind the eight ball. We're only down 131 again on a floating unrealized P&L. I would be thrilled to have our target hit at 88 to 900. It's about $188 if I'm reading that right. Yeah. So negative 10,900 is where we got in at, and the current midline here is at a negative 11,087. So that is $187 difference. So the price axis is not the price of each instrument. Instead, it is a notional value. What do I mean by that? So if you're trading the um, crude oil market, let's say, you're trading at 62. What's the current price of crude oil? It is $64 roughly. So it's 1,000 barrels at $64 each. So that's $64,000 in value, notional value. 1,000 barrels times the current price is $64,000. So that's the notional value. And what we do in spreads is we look at when we compare a spread, we got to compare dollars to dollars. And that's what we're doing here. So this is a dollars to dollars thing, valuation. So it makes it actually pretty easy to compare what's the equity difference between the entry and the exit. It's all in dollars, and we just take the negative 10,900. You got to add $186 to get to that level, and that is our spread distance from entry. All right, so we're only down 131 right now. Now you can trade a spread chart just like you trade any other chart. This is a technical analysis situation, not a problem. You're looking for breakdowns in price, you're looking for changes in trend, you're looking for price patterns, multiple bar price patterns, head and shoulders, rising wedge, rising triangle, ascending triangles, descending triangles. Not many people are going to be doing candlestick analysis on spreads. You want to look a little bit longer term than that for sure. Now here's three dives. One, two, three. Would have been a perfect buy situation right above here, right? So we have one thrust up here. Well, I mean, you could do one, two, three, a third thrust up here, and we're seeing it sell off. We're in a channel right now. I'm only down 118. I'm into 4 contracts. Now that's another consideration. If you're trading an eval account, you want to make sure you're not exceeding your max contract count. Um, if you, let's say, are given 8 contracts to be open at any time, any one time, you want to be very careful of that because each spread trade in this situation is a 2 contract order. Oh, another important point with spreads. I know I'm giving you guys a lot of spread information. You can certainly unbalance them. You don't have to go 1-to-1. If you traded 2 6As and sold one 6J, it gives a different weighting. You get more weight put onto the 6A. BOSA gives you a little quick analysis way to determine if that is a smart move or not. Um, it's called this V dollar ratio, and it gives you a hint of the equity daily equity ranges, the volatility dollar, I call it, ratio between the two. So let's say the 6A only moves $200 in equity from high to low, right? What if the 6J moved $400 in equity high to low? You want to balance those two out. You would trade 2 6A contracts to equal the volatility movement of one 6J. So that's when you can do those balancing games. It's a little more advanced topic, but certainly applicable. All right, I'm gonna let this trade here. I'll be back in a moment. We're only down $68. This could be the turning point. The 6S is starting to pick up a little bit of movement up northward. That's helping our position. The 6E is dropping. I'd like to see that. I want to see the 6E go all the way down and the 6S to stay stable. You can see we're only down 18 bucks right now. All right, let's have this position hold for a few more minutes and we'll talk back. Oh, we're positive. We're to the green now. All right. A little bounce in the spread. 6E is holding. 6S, are we dropping a little bit? Yep, I do have a schedule conflict coming up, guys, so I'll have to shut down the room in a moment. But I wanted to introduce this to you if you've never seen a spread trade before. And remember, honestly, you are trading spreads every time that you put a trade on your platform because you're actually going long whatever you're buying and you are giving up dollars. Or let's say you go short, right? If you go short, you're actually uh, gaining dollars for selling an instrument ahead of time. So something to think about. So let's look at the US stock market. If you are very bullish on the stock market, you mean to say that stocks are going to be worth more value in dollars than they are today. So the dollar is going to decrease in value. If you just bought a stock in a company that like Ford, it doesn't move very much every day, but if all of a sudden the US dollar tanks, you're not in dollars, you're in Ford shares. Ford will rise in its value of dollars because the dollar value is dropping so much. So that's one of the advantages of a spread trade. You're shorting an instrument that's weak and buying an instrument that's strong. I know. I get a little heady and mathematical, but that's the way I approach things. All right, guys. Well, we're gonna tune back here once we get some more a couple more hours, I think, or a couple more minutes from this trade. I think we're gonna be hitting down here at this level. I'll just move it up as we trade. Feel free to tune back again a little bit, and we will cover this market in greater detail. All right, God bless you all. Again, really appreciated you guys today. I'm glad to hook up with you again. Feel free to email me if you have any questions. My store is store.sbgtradingcorp.com, and it's been great being with you. I wish